into the early afternoon. I decided to do a live here, and it's at a very random time, so I don't expect a lot of people. But there's been a lot of developments here in the markets. Bradley, welcome in, and thanks for being in Tom's Army for your first month with the emoji badge of me being abducted by aliens. But we've had a major development here. As what we anticipated, Jerome Powell said they're going to go back to cutting rates in September. So this means that quantitative easing is in fact back in full force. It means it's back on the table for your favorite cryptos as we've front ran this. So you should already be in what you need to be in before he spoke. See, we've already come up substantially from when we first assumed this was going to happen. And we got validation back on the 19th or the 20th when the Treasury minted $1 billion, just over $1 billion in USDT. So that told us we were bringing in quantitative easing. I'm not waiting for them to tell us we're back to quantitative easing in September. I'm front running it, and I've been front running it because we knew this was what was going to happen. Not only did XRP check the boxes here in a couple big ways. One, that liquidity grab we had was nothing short of spectacular. We went up, and in the moment I was like, you know, it's a very good thing that XRP went up because it had a quick spike up to 60.3 cents. And when it was making this drop, I'm like, it's a very good thing it did that because it gave us the proper amount of liquidity to grab. It came all the way down in a matter of like 25, 30 minutes to right around 59 cents. And then within another 20 minutes, it shot right back up this. That's when you are talking about moves up, you need liquidity grab. See that nice V-shaped recovery that we have right now? This is what we wanted to see. We wanted to see some kind of grab of liquidity. And now we're going to try to figure it out here. Now it's where it gets very interesting. That's why I came live, because this is the time of all times. It would appear that we've received the biggest catalyst of all now, because now we know in fact that we're going to have rate cuts next month. And now, do you expect the markets to pump on the day of rate cuts, or do you think the markets now are going to realign and start pumping leading into it, and it's going to be a buy the news or buy the rumor, sell the news? Because the rumor is we're going to have a rate cut. So now the rumor would be some people are going to say, oh, I'm not going to buy until they actually cut rates because that's when the market's going to pump. It's usually the opposite. You usually get a pump going into the actual event. So the event would be the rate cut in September. So what ended up happening here, not only is XRP's flat right now, but in all intents and purposes, it's not. We had a dive down to 59 cents already. That's huge. That's huge. So some people are going to say, oh, it's still at 59.8. It is, but when it dove and grabbed that liquidity at 59, that you need liquidity to push up to the next layer. And we've been stuck at that 60.3 resistance. Going down to 59 very well could have grabbed us the liquidity to now get to 61.8. It's a big difference. It's a big difference. So we'll see exactly how this plays out. I don't know how many people are going to be here because I didn't tell anybody I was going live. So if it's just me and nobody else, you know, I'll do this in a timely fashion. But if there's just a few people talking, I'm going to stay here for a while. It's going to at least be 45 minutes. I'm still doing the live tonight at 6:30 p.m. Eastern Standard Time. It has no effect on that. David, welcome in. Jay Mathers, good morning. And thanks for being in Tom's Army for 3 months plus with the XP Meteor. Laugh aloud, I seen the liquidity spike and shut down to take an early lunch. Knew Tom would be on. Thanks, buddy. Hey, no problem. Full send, long care. And if anybody received your $100 voucher, because I've gotten 4 emails so far as they sent the vouchers out to the ones that were affected with this issue on HOTCOIN, which we're going to have to deal with. You know, we're dealing with it. But I've never been a part of a stock market or an exchange, crypto exchange, that actually sent us something, or sent me personally something. Definitely nobody in my community. So the fact they sent a $100 voucher to the ones it was pretty insane. So, Bolziak, welcome in. Exciting day indeed. Gordon, good morning to you, friend. The Great Fallen, welcome in. Hello, brother. And what an exciting times it is, Great Fallen. I know you've seen that liquidity candle, and I bet you were excited. I seen in the comment you said you got in as well. So I think on a leverage trade, that is, I think that was a good time to start getting in there. There's no guarantee it doesn't come lower, but when you start grabbing those, you always want to get in on a liquidity strike. That was a 3% strike. Quickly. Dazzy, welcome in. Mad Eagle, thanks for being in Tom's Army for your first month, along with Bradley. And I know you both are because you have the emoji badge of me being abducted by aliens. That is my face superimposed on that emoji badge. So it's a pretty interesting thing right now, what's going on here. And we're going to do a lot. We're going to watch together the 15 minutes of Jerome Powell. We're not watching all the bullshit. I got a nice clip here of 15 minutes. So we'll watch that together. That's how we'll start this. And then we'll also go over the fact that, actually, no, I don't want to go into HOTCOIN. If we go into our copy trade, we'll take a look at that in a little bit because it's still active. Our stop loss was well below the liquidity strike as we planned for something like that to happen. Let's see what else. Bitcoin we'll talk about. It's up 1,000 points, 1.82%. Bitcoin also had a very pivotal moment here. We went up to 62,280 moments after Jerome Powell spoke, right? Instead of just dilly-dallying, we came down and had a 2%, 2.5% liquidity strike. And that's technically, that is where my eyes started to pop out of my head. And I'm like, uh-oh. This is what we need to maybe open up the door here. So there's going to be a little volatility here, but shake through the volatility here today. And when we get to that next candle flip tonight, it's going to be something interesting. Even leading into it, we could have a very interesting spike here. So while we're doing this live, just make sure to hit that like button so YouTube recommends this so we make it through the analytics. And I'll catch you on the other side of the intro. Thank you very much. Good early afternoon, 12:05 p.m. Eastern Standard Time on this Friday, August 23rd, 2024. I'm XRP Future Millionaire, and I reside in the great state of Michigan. We could get some big liquidity candles. That's why that one was big. I would suspect if it plays out in an orderly fashion and we don't go back down to 59 real quick, which it looks like we're holding up here and we're trying to work out a next layer, I would think the next one would probably be great falling. If I had to guess, if we're going to have these strikes back and forth around the 60-cent mark, I think what would be advantageous is now, you can see in the small time frame, we created a nice little W reversal. I have an inverted hammer in the 5-minute as of right now. And I think it would be advantageous for them now if they're trying to get in, and we got a reversal candle in the 5-minute as well on this chart. But what if they did come up and now they fill it out, right? They come up here to 60.4, then it back to, well, maybe not even. Maybe it comes up, better yet, let me go to the other chart. This is what I was thinking. Let me bring this out into a higher time frame. What if it goes up to that 61.3? What if it fills this out, great falling, and it doesn't go up past here yet? It fills out this technical move. Because it didn't, it pulled back up real quick. See, we could have had a technical drop to 585, but it maintained the integrity here. So now, since we didn't go down, and if we what if it does pull back up? We go 61.3, and then we get the consolidation back off of 61.3, and then you start to get another order filled. So they start to do it by level. So now it broke 60, they take that one. Then the next one, when it gets to 62.5, it pulls back down to 61.8 or whatever, and they start grabbing it that way too. That's what I'm wondering too, because I'm not sure if they're going to let it go straight up to 64, if they're going to do layer. I feel like it could be a layered attack. Very layered, but it's very, I don't know, it's a very volatile state of affairs right now, just because we know the news, and it feels like there's positioning happening right now. And when positioning happens, you all of a sudden get a quick spike up. You know, you're going to get this buy order that comes in, and all of a sudden you get a 2% move real quick, and you're like, holy shit, that happened in like 7 minutes. Or better yet, it happened in 4 minutes. That's what I'm waiting for. We haven't got that satisfactory spike now after getting that pull down to 59. Even if we go back down, it would just solidify it even more. But we need that, now we need that overzealous push up. Now the retail investors that are like, oh, maybe I should get in. You know, they can always give us that little spike. Mr. Powell's purple tie, we good. Yeah. Mike Stevenson, good morning, and thanks for being in Tom's Arm for 6 months plus with the XRP Predictor. Love seeing that, my friend. Thank you so much for the continued support. But all right, let's get into this. It very well could. They'll fill inefficiencies anywhere they can get them. Yes, sir, great falling, and it's oftentimes more advantageous for them to do it after they've already went down. So they filled a big order there. We could see from 59 how it immediately bounced back near 60 cents. Now it's better off for them to get the positivity in retail coming in now, so they can get some exit liquidity at the top here if it's 64 or 68 or wherever they decide. And now you start to get retail interested in every pullback. Hits 61.5, comes back to 60.8. Retail thinks they dodged the bullet, buys in. Goes up to 63, comes back to 62.8, or 63.4, back to 62.8. And then they're like, oh my God, better buy in here. Then it goes up to 65, back test 64. Then they're like, oh my God, I definitely need to get in. Then it goes up to 68. And they're like, well, I got to buy back. Where's the back test? Comes back down to 64. They buy and it either falls through, or then we can continue up to that 72 or 73 cent level. And then if that breaks, then they're like, oh my God, it's at 73. I have to buy now. Then it makes the rally to 85. And that's the rising channel resistance. And that's when everybody would be chasing. They'd be like, oh my God, it's about to hit $1. And that would be the most advantageous, to go 85 to 50 and then $1.15. We've seen it happen in 21. I feel like we're starting to do this. I do, because all we've been doing is every time we hit 60.30, we come back down. 60.30, come back down. 60.30 came back down to 59, and that definitely shook everybody out. I get anybody who was in a leverage trade that didn't understand and was just trying to be fancy with a 2 or 3% stop loss. They're out. That was a liquidity strike. When you're a leverage trader, you either have to buy the liquidity candle and keep buying it until it breaks out, or buy it somewhere where you think you're in range and then you just buy the way down. So I started at 59.7, bought it down to 59. I'm at somewhere around the 594, 595 level now. So, you know, it's a never-ending battle. I mean, we could put this on like a split style, but let's let this play out a minute. But is anybody interested in seeing what Jerome Powell said? I am. I was at the gym. I knew he was going to announce what he did. But please make sure to hit that like button so that we can get the content out. I have a feeling that this is going to be more widely received after it goes on the rerun, just because I'm at such a random time. Hi, Tom. Think about including Cape Town, South Africa as part of your potential list of cities, countries to visit. Hey, I talked about that exact, well, the exact continent, I should say. But that region, just not pinpointed a spot. That's excellent. He said Cape Town, South Africa. Because I talked about Africa, or South Africa was a big part of my audience too, so that's beautiful. But believe it or not, more than 2% of my 23... And by the way, thank you everybody. We went over 23,000 subscribers today. I can't even believe it. Every 1,000 we go up, that number just keeps looking incredibly bigger. And it's like 1,000, yeah, 5, 10, but now 23, it's like, holy crap. You're waiting for Bitcoin to hit the 0.5 on the... Where's the 0.5 on the fib, Matt? If I may ask. And let's get into Jerome Powell.
Inflationary episodes when inflation expectations were less.
Time to relax,
sharp
folks.
Increases in unemployment that characterized earlier disinflationary episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low. So let's begin with the current situation and the near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so. Prior to this episode, most Americans alive today had not experienced the pain of high inflation for a sustained period. Inflation brought substantial hardship, especially for those least able to meet the higher costs of essentials, like food, housing, and transportation. High inflation triggered stress and a sense of unfairness that linger today.
What the? I'll take advantage of the commercials. Mo, welcome in, and thanks for being in Tom's Army for over 6 months with the XRP predictor. And Mike, thank you for saying that. You said I have greatness in me and people will see and follow good leaders. I appreciate that. And the one who sent about the fib, where's the fib 0.5 level at, out of curiosity? I'm very interested.
Policy helped restore balance between aggregate supply and demand, easing inflationary pressures, and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%.
It's grown. Remember, it's only gone up 2.5% over expectations in the last year, remember. But it's still gone up 2.5% overall. I mean, and he's saying that he's got more confidence. The jobs number just came out as a fraud, and they underestimated it by almost 1 million, over 1 million. It's going to end up coming out in April when it comes out next year, the actual revised. But the new revised from April of this year, they lied to us by almost 1 million jobs that it's already provable. So I don't understand.
Turning to employment. In the years just prior to the pandemic, we saw the significant benefits to society.
Thank you, Matt.
From a long period of strong labor market conditions. Low unemployment, high participation, historically low racial employment gaps, and with inflation low and stable, healthy real wage gains that were increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%. Still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. The hiring and quits rates are now below the levels that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose and why it has fallen so significantly even as unemployment has remained low. There's a growing body of research on these questions, including Gowdy Eggerson's work, which we'll shortly discuss, and this is a good time for this discussion. It is, of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks. As so often happens in times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession in mid-2020...
There you go. He just admitted to hyperinflation. There you go. He just admitted to creating hyperinflation. If you know, you know. If you don't, you never will.
The economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020, and again...
My God, keep talking, Jerome. Keep fucking talking. I forgot to look at gold and silver in my B2 gold today, but I'm willing to bet it's probably pushing 285, 288 right now. And gold's got to be at 2,530 or more. Man, 2,515 because it was down to 2,480 yesterday.
An early aid on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023. Supply chains were stalled by a combination of lost workers, disrupted international trade linkages, and tectonic shifts in the composition and level of demand. Clearly, this was nothing like the slow recovery after the global financial crisis. Enter inflation. After running below target through 2020, inflation spiked in markets in short supply.
Yes, I am, Prana. I sure am. Bozak, I'm counting on it. I'm betting on it that happens. Not that I don't have a lot of gold value, but I'm saying I'm betting on it with how much I purchased in silver. I'm betting on it.
Such as motor vehicles. My colleagues and I judged at the outset that these pandemic-related factors would not be persistent, and thus that the sudden rise in inflation was likely to pass through fairly quickly without the need for a monetary policy response. In short, that the inflation would be transitory. Standard thinking has long been that as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one. With most mainstream analysts and advanced economy central bankers on board, I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course, and that demand would rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021, although progress came slower than expected. The case began to weaken around mid-year, as was reflected in our communications. And beginning in October, the data turned hard against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted.
If you're interested in that, link in the video description below or on my page. Just go on my home page and click on my picture and it'll pop up the BITUNIX plus 5 other links. HOTCOIN will be underneath that as well. That's in the video description below. Click on my link, sign up, do that, and you see the bonuses in front of you. And if you trade futures, you'll understand just how easily attainable that is at each category. So just take advantage of it. We're running out of time.
Beginning in November, financial conditions began to tighten. And after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. the improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China.
Hey,
Real quick, how would you?
good timing. You can even, if you want to, HOTCOIN or BITUNIX worldwide, no VPN or KYC, or you can send a donation PayPal, Venmo, or Cash App. And there's also BLOFIN if you want to take a little more security over your stuff.
Rapid increases in the demand for goods, strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million jobs from the middle of 2021. This increase in labor demand was met in part by workers rejoining the labor force as health concerns began to fade, but labor supply remained constrained. And in the summer of 2022, labor force participants...
Oh yeah, by the way, you see how we're watching this video? Doesn't that make you even more appreciative? You don't have to sit through those ads while you're watching me live. Thank a member of Tom's Army, past, present, or future, and anybody who sent a donation. We haven't had any of that today, but everybody in the past, we're doing these ad-free during the lives because I don't want to sit through I don't want you guys sitting through ads. Now on the rerun, you're going to have to watch it, but that's a thank you to all of you. That's why I turn the ads off during the lives themselves. Everybody who's ever paid it forward in any kind of way.
Remained well below pre-pandemic levels. There were nearly twice as many job openings as unemployed persons from March 2022 through the end of the year, signaling a severe labor shortage. And inflation peaked at 7.1% in June 2022. At this podium 2 years ago, I discussed the...
Exactly what I did, the great falling. It's my A1. Liquidity's great. It's very transparent. I've honestly never had an issue. I wish they copy traded there is all I'm going to say.
Possibility that addressing inflation could bring some pain in the form of higher unemployment and slower growth. Some argue that getting inflation under control would require a recession and a lengthy period of high unemployment. And I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023, and we've held our policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation. And their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. A word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced without the need for economic slack, so long as inflation expectations are anchored at our objective. That's what the model said. But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy, and specifically in the labor market. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand.
Thank you, Jerome. Thank you. Since 2018, I bet against the dollar. I bet against you, the Fed, and the SEC, and I've been ridiculed by my family basically the whole way, because literally no dollar savings except for what I put in commodities and that kind of stuff. I put, you guys all know, into silver and gold because I don't trust the Fed and I don't trust the US dollar. And man, oh man, to say we're at $2,500 right now plus, I remember sitting here at $1,600 saying, I'm telling you, the US dollar, first it's going to be below 100. And I even said it was going to go up to 110 first as a facade. And I said, you better buy as much gold and silver as you can, because gold and silver is not getting cheaper. The dollar is just becoming more and more overvalued. As they continue inflating, they were expanding the money supply and the US dollar was going up by ratio. It doesn't make any sense. The only explanation is they're buying the debt. They're the buyers and lenders of last resort. If you don't know what that means, watch Gregory Mannarino. He'll explain it better than I can, because I don't have enough time, because I don't do that kind of show. There's people you can watch that I even trust. But it's insane to think that the US dollar is just going to go parabolic and keep going when they keep printing money. I mean, just telling you guys, XRP Future Millionaire, and as I said from day one, it does come from XRP, but it comes from everything. Remember, the gold and silver I bought came from profits in XRP. Every time I had profits, the one was massive, over 12,000, obviously in 21. But there's been so many times of a few thousand. I just put it all in the gold and silver and kept the initial buy-in and then a little bit more so I could have a little. And now it's just snowballed how much we have. And that's all part of XRP Future Millionaire. XRP got us the gold and silver. People don't understand that. They just lost the money in the bear market. We put it into gold at 16, 17, 1800. We put it into silver at 17, 19, and 22, 23. Like, as the dollar keeps devaluing, it's about how you make your next move. You're legitimately running out of time. If I couldn't convince you at 1600 gold, I'm certainly not convincing you at 25. And I certainly can't convince you when I haven't bought either of them in 24. I've made my bet and I'm going to sleep in it now.
And the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years. As we begin this process later this year, we will be open to criticism and new ideas while preserving the strengths of our framework. The limits of our knowledge, so clearly evident during the pandemic, demand humility and a questioning spirit focused on learning lessons from the past and applying them flexibly to our current challenges. Thank you.
So, what did I get out of this? What did I get out of this? What did I get out of this? Well, I got a few things out of this. But ladies and gentlemen, you know what time it is. I know what time it is. And somebody had a very, very observant take of the sun. They said, I started to notice whenever the sun comes out, very soon after we have a big rally. Ladies and gentlemen, the sunny days are here again. Oh, sunny days. Oh, what a day. Oh, sunny days. Oh, what a day. I wear glasses 'cause I can't see a motherfucking thing. Happy days. Oh, happy days. Oh, what a day. Oh, happy days. Oh, what a day. XRP will reign supreme. Let's just not get caught in the FUD. Oh, we're gonna crash, and they said we would fail, but we rose and we rose and we rose and then we dropped again. Oh yeah. Stay true. Stay blessed. Hey, you know, I think it's starting to take at the end of the song now. Something's changing. It's becoming the vibe a little bit more. See, it takes time for it all to come together. We've been doing this since 2021. And just in case there's any hecklers in the audience, because the true ones will stay, if you've never heard this, you know you've made it when somebody turns your work. Where the hell is this at? Where are you at, sunny days? I can't see. Oh, here we are. When somebody turns your work into this because you said it clean one time. Sunny days. Sunny days. Here again. Ooh. Sunny days. Here again. Sunny days. Here again. Sunny days. Here again. I wear glasses 'cause I'm so cool. I can predict the charts. Sunny days, here again. Sunny days, here again. Not us. Sunny days. We paid our property tax. Sunny days. Joy Tom's on it for $9.99 a month. See, you know you've made it when somebody would go out of their way to make that for you. It's awesome. So, you know, you have to stay. Whoa, XRP's up to 60.27. Very interesting. Very interesting that we'd be retesting the 60.3 cents. But furthermore, I think it's a little more than 60.3 because we've pinpointed it. This is the beauty of what we do, ladies and gentlemen. As I stated yesterday, until we see further notice, until further evidence, that 2018 resistance has finally fallen. We've had enough days here. Well, we can't say that yet. We haven't closed a weekly or monthly candle yet. So who am I to say that yet? But until it proves otherwise, as of right now, we are on the first leg of a historic episode here. We're at the start of a series. So just think of it as chapter 1, season 1. By the time we get to chapter 1, season 10, everybody who wasn't in, their mind's going to blow up. And everybody who's in is going to be able to sit back, relax. And if you had a second job, you're going to actually be able to step back. Maybe not from your first job, because remember, you have to have some kind of revenue. I don't care what or how or where or when. You know, short of being a criminal, you don't want to take it from people. You know, there's such a thing as bad money. So bad money, you know, I could take it every step of the way on YouTube and I could be much more wealthy. But I'm wealthy enough in my own way. Maybe not to somebody else's standards, but to my own. So, you know, there's good money. So you want to do the good money. You don't want to take from somebody else. Because remember, the money's coming from somewhere. So if you're scamming somebody or conning somebody, yeah, you're getting richer, but you're taking it from somebody else. Likely the poorest of the poor when you con people, because they're the more susceptible. You don't see rich people falling for scam. Well, some do because they have real estate scams or whatever, trying to get richer. But they're not in the, oh, let me get $500 from this cash advance place at a 39% interest rate and compounding interest. And now my $500 turns into $2,000 and I'm legally obligated because I'm an idiot and I don't know how to read because I just want money. You know, you don't want to go down that road. You want to be honest. Now the person on the other end is making out, but it's not good money. You know, you don't want to go down that road. Go down the honest road. Collect cans off the side of the road. I say it all the time and people get mad. I'm not joking. You know, there's not going to be a much more time for that. There really isn't. wasn't too long ago when me and Julie, with the two girls before we had tea, we would eat the stuff from the dollar store. And fortunately they had like some decent chicken and stuff that was pre-made. But oftentimes me and Julie were like, well, we get one piece of this little chicken nugget thing and they get the rest. And now it's a different time, you know, at least we can eat. I don't know, man. I think there's something to be said when you have to go through the ringer, like with XRP. Again, you're getting beat up. You keep coming back over and over, but you're paying attention. And everybody who comes in the community who's not familiar, and everybody who trades XRP who doesn't understand what we do here, they always come in and the first thing they say, oh, looks like you're losing all your life savings, XRP future broke air. That's what they always tell me. And I love it. It makes me laugh now when I hear it. I should have named myself XRP future broke air. It would have been, it could have been interesting. But they just don't understand what we built. Every time they say that, it makes me cringe a little bit, only for the fact that we made so much money off of XRP since 21, or in 21 and beyond, that we've been able to put it into gold and silver, real store of value. And now gold and silver, especially gold's exploded. Silver will catch up. And we bought a lot more in silver just because the gold-silver ratio was in our favor with silver. And you can always turn it into gold later when it gets back to 30-to-1 and better, the ratio, and it will. But while everybody makes jokes, the ones who don't understand, our wealth is extra amount. Think about it. In 2021, watching me, I didn't have all these other legs that I could show you. I wasn't in a position where I could have all this money in crypto, have all this money in XRP, healthcare just staked, and be able to even show you an opportunity. And I'll show you right now because I like to throw people off when I'm talking. So we talked about B2 Gold 2 weeks ago today. 2 weeks ago today. And I said, ladies and gentlemen, this is a historic opportunity. And even if you just ride it to $2.80, please pay attention. Overzealous sell-off, and it was wrong. It would have been a on-point sell-off if they would have missed on revenue. The earnings they didn't even miss on. They reported a positive 0.06. The only thing they missed on was there was an estimate of 0.072. So they just missed on a fake number. It meant nothing. I believe they did that on purpose. They overestimated so that there would be a dump off, so that the speculators are the ones who are backing it bigger would get in pre-dividend payment here coming up, and to get the speculators out before the actual big moves up. And look what happened. The revenue they beat, that's all I cared about. And I told you guys, I know it's at $2.04. I think it was at 240 something, 241 when I came on. And I said, I don't care. Or 238 because it was below where I bought, and I bought a little bit more. And I'm like, I don't care. I'm like, this is an overzealous sell-off, and this is it's an extreme sell-off. It's not warranted. They beat revenue. That's all that matters. If you're a company, do you care about the expected earnings or do you care about your overall revenue? You still made earnings, 0.06. That's not too shabby. The revenue, they estimated 472.684 million. They reported 492.569 million. Why do I care so much about B2 Gold? I don't get paid to talk about it, but I do because of my investment. B2 Gold has their most ever production right now in their mine with silver. Why is that important? Because the growth in silver is going to be extraordinary over the next 5 years in price. And now all of a sudden, you think it's a coincidence that now all of a sudden they found their most producing silver mine, or have they just been waiting to start actually excavating it? That's what they've been waiting to do. The smart ones do that. They wait for the right time and then they start mining it. That's what the smart ones do. And then they produce a shitload of gold. And in my estimation, B2 Gold should be at $6.36 based on my own evaluation. And I'm not a financial advisor, so what the hell do I really know? Except for the fact I created that chart, didn't I? And the bottom where it could have possibly tapped, right, that green line. That was our overexpansion. And we almost came down there. Look, we created inverse head and shoulders. What did we bounce off of? $2.80. Looks like a nice bull flag probably forming here. The Fed, by talking into quantitative easing, just gave us a golden goose. And if you want to sell out, at least make it come below 275, please. Please. If you bought in at $2 and you owe me this at least. And yeah, I'm making you give me back 12 cents per share. I'm just telling you, you're going to have to wait. I bought in 7,000. If was that a big enough purchase for everybody to be like, hey guys, I'm fucking serious. Like, I think it. I bought in at $7,274 or $2.41 average. I have 3,017 shares. It's up 18.6% in 2 weeks. I've made $1,354 if I sell right now. If I sell at the 275, it'll still be about $1,000. But at least give yourself the satisfaction that it's breaking down, because we're going to have a historic rally. Dividends come down a little bit, but still at 5.69. You technically usually get about a 0.04 cent. So you get about 4 cents per share. And that's paid off just transparently all year the same way. So 4 cents per share. I have 3,000 plus shares. You're looking at a $120 dividend payment. Free money. Just, hey, thank you for holding. It's taking a little longer than expected. Reinvest this and you'll get another 60 shares approximately. 50 shares, you know, depending on the time. Maybe now it's only about 40 or 45, but you get that, you know. So that's just, I try to find unique ways to make money, and everybody's always like, how can you, you know, not have a job and actually do this? Hey, what was that? Was that a donation? Well, I'll be damned. I will be damned. I accidentally deleted where it showed the donation. Pants, thank you so much for the $5 donation. Thanks for the BT. Oh, for the B2 gold tip. I mean, excellent. And now, you know, it's up to you. There's that $2.80, that breakout support. If it holds that, $3 and what is it, $3.40, and some people will leave. See, 20 people left because I talked about B2 gold. It's unbelievable. Because people just don't like to make money. I don't know. So right now, we have to break over. I'm okay with people leaving. I'll be honest. I'm okay. So 279 underneath. I'm just going to speculate here and say that bull flag that's set up is probably going to bring us up here to 296. See, I came on a couple days ago and said I'm pretty sure. Actually, it's a little higher. I'm pretty sure that we created this little formation. I think it was yesterday when I came on. Maybe it was even this morning I talked about it. No, I don't. Maybe I didn't. Maybe this was just my own analysis. I may not have even shown this to everybody because this just actually formed too on that push up and the drop. Yeah. And guys, the reason why, and no, not all mining stocks, you can't just pick them all out. Trust me. I've had that adventure before. Oh, I've had it in the junior mining sector. Had $1,000 in AAU, or GPL, Great Panther Mining. Thanks, old Vincenzo Gold Crypto Investing. Oh, he'll laugh about it too. But because of that experience we had, we've made so much more on gold and silver, or commodity stocks, it would make your head spin 10 times more than we lost in that trade. At least. Only because we had that experience. And now we've learned the value of sticking with the dividend paying ones. And yeah, you can make more on, and that's a beautiful setup there to 296 it looks like. Oh man. Oh man. It's fucking fantastic. Lonzo said, did you hear about the Bank of America patents on how they are going to use Ripple technology? I have, but I'm not talking about it yet because I don't know how official it is. I've seen some of the rumors over the past week or so. More it's coming out. I don't want to talk about it yet because I don't know if it's true. As much as I would love it to be true, but I don't want to talk about it unless I actually know. But I have seen it. It's on my radar, my friend. And thank you for the $5 donation. Holy moly. What a generous audience we have here. Just very generous. So while I still have everybody's attention, because Julie's got to go to the store and do some school shopping, I'll be back tonight. Do we think XRP is getting ready for a move up here? Or do we think it's a little early still and it's going to come back down? That looks, it's interesting. What do we think? Do we think we have another liquidation strike to the bottom? Or do we think we're going to continue pouring on here during the day? Bitcoin's holding rather well at 61,571. 30 minutes looking like an inverted hammer. That's pretty... Oh, these are inverted hammers on Bitcoin on the 35 or 30 and 45. I think XRP is trying to make 60 cents the new support here. Is that fair to say? Short term looks a little more bearish, but look at the 2 hourly. We're trying to flip this into 60-cent support. And guys, if you bought XRP and USDT, listen to me. If USDT goes down, so what? Just send XRP to a exchange. Your XRP via the ledger, send it to another exchange that doesn't deal in USDT. Or simply sell it into USDC. Or in the future, just simply sell it into RLUSD. Via the ledger. Via Ripple. Via the ones who are in charge of XRP. So your money will still be the same value. Because if Tether goes way down, let's just say you bought it and on Tether, XRP is at 41 cents. You know, technically, if a smart person would take advantage of that, they would buy it linked to Tether at that price. Let's say it's 55 cents on USDC, and you're wise enough to see USDT's down to, oh, I don't know, you can buy it for 41 cents instead of 50. Well, buy it at 41 cents, send to make a withdrawal off the exchange, send it to another exchange that deals in USDC, and you still have that same amount, and you're going to see you just made an instant profit. People do this all the time. People are also afraid to do it because if the exchange is that much liquidity, what's the odds that it goes down in the process of you doing this? It's possible. You know, it's possible that they would cut and run before you ever get that withdrawal. They won't approve the withdrawal. You know, those are all things to consider, but that's what I'm saying. If you have it in that situation, don't panic. It's still worth this. It's all about... no. Yeah, I agree with you, Pump Master Flash. I watch it too because I believe it's manipulated. That's why I won't go on an exchange that only deals in USDT. They have to have a USDC conversion. Otherwise, like KuCoin, I just think that it's a disaster waiting to happen. It got below 5.5. It's getting a little constricted around the neck. But guys, I got to go. Julie's got to go to the store for school shopping. I love each and every one of you. I'll see you tonight at 6:30 p.m. Eastern Standard Time approximately. Thank you all so much.